So I'm just blowing their mind at the beginning of the appointment call to understand they're gonna get way more value than they thought. That's my goal at this point. Man, what's going on, guys? Today we're gonna be talking about the life insurance mortgage protection sales process and how to actually implement this in your own business. And then at the end of today's video, guys, I'm gonna go over 3 tips to actually be able to successfully use this. And that includes the equity protection presentation inside of mortgage protection sales. So my overview of my sales process for mortgage protection and my script is going to be number 1, my intro. Number 2, I'm just gonna grab some education. I'm gonna do some overview, medical questions, credibility. My why section, I'm gonna go back into education mode, and then I'm gonna present those options, and I'm gonna help those people get that coverage, okay? So super simple at the beginning, guys. All I'm trying to do is get them to admit in my intro that yes, I did fill that out. Yes, that is me. I know exactly what you're talking about, okay? So I'm gonna ask a question in my intro, right? So my intro could look like this if I'm calling mortgage, mailers, if I'm calling internet leads, age leads, it doesn't really matter, okay? It's all the same thing. Hey, Susie, this is Tyler at the Mortgage Protection Center. I got that card that you get filled out and mailed back to our office about the mortgage protection plans. Looks like you had listed your mortgage as $200,000. Is that correct? Yes. Okay, and that's at Wells Fargo? Perfect, right? So that's my intro. I just want to get them to admit that they know what I'm talking about. If yes, I'm on the same page. Yes, that was me. Or yes, this is my beneficiary, right? I'm going to ask them that question. They're going to say yes. And then I'm just going to try to get an understanding of their situation. And I like to do a 2-step close, right? So I'm going to set an appointment, and then I'm going to go back and I'm going to try to help that family, right? I'm going to see how much of this I can get through before I set the appointment so I can be as prepared as possible. If they're at work and they're really trying to rush me off, they're like, hey, I'm at work right now. It's not a good time. No worries at all. The first call is actually mainly just to set that appointment for when you are gonna have more time. I just wanna get an understanding of what your situation looks like, what you were trying to accomplish with this, and then I'll go do some homework, I'll go to work for you. Does that sound fair? Okay, perfect, right? And then so I just wanna ask a couple questions. Hey, currently right now, your mortgage is listed at the $200,000. How much equity do you guys have? How much do you pay a month for it? What's your interest rate? I'm gonna ask them those basic, monthly payment, ask them those basic questions right there. I'm trying to get their overview of the situation, right? And then I'll ask, is it just you have a family? Is there anybody else? Okay, and I'm assuming you would be leaving the home to them. Do you want them to sell the house and downsize or stay in it? You get no good overview of the situation for my next call. That's all I'm trying to do right now. And then I'm gonna say, hey, most people, they wanna take care of their mortgage to make their family either be able to stay in the home or take any financial burdens away when they do pass, to make sure they're not in a position to have to come out of pocket and be on the phone with banks, lenders, and people that are trying to get money from them at a time when they're mourning and grieving about losing you. Is that kind of what you're looking for as well? Yes, I'm just trying to get a yes question in there, get them to know that we're on the same page. Cool, right? If I can get to medical questions, great. If not, it's totally cool. Some people are at work, you gotta jump off and try to set the appointment, tie it down 2 times, set it, boom, we're gonna move on. If I can get to medical questions, hey, really quick, any kind of medical diagnosis or ailments, right? And if I have to intro that, I'll say there's over 35 different companies, just so I can be a little bit more prepared and do some homework to make sure that we're set up the proper way. Any kind of medical diagnoses or ailments in the past? Do you take any prescription medications? What are those for, right? They'll tell me, boom, next section. So I'm gonna fly through that part to make sure that I'm getting a little bit of information, I'm getting set up for that next piece in the process. That way I'm not totally unprepared, and I know what I'm doing when I get on the second phone call with them, and I'm just prepared for that second call. Beforehand, I'm gonna make sure that I have that overview situation put in place, is mainly so when I go do look at options, I know that if I gotta go equity protection, what I can be prepared for. If I can go the term or the CBO route, I know what I can be prepared for, okay? On that second call, when I get back on the phone with them, I'm gonna jump right into, hey, Susie, this is Tyler, about our mortgage protection program. Go ahead and grab a pen and paper. I'm gonna say, take my name down, take my cell phone number down, take my national producer number down, and I've already sent over my license, and I've sent over a virtual business card that I made on Canva that you can make too. Just search in life insurance in the design section on Canva, and you'll be able to create one as well. Super simple. Just put your info. I put some of the companies that we work with, just make them believe that I am a trusted advisor, that they know who I am, so it looks a little bit more professional than me just being some random guy giving them a phone call, right? I wanna make sure you have my information, that way you can call me, text me whenever. I'm not like Jake from State Farm. I'm gonna be working working with you alongside you moving forward. If you need anything, you can text and call me whenever, okay? That means a lot to these people because they don't want to be treated as like a sale or just a number, right? So people believe that they're getting into mortgage protection programs, right? They believe that they're starting to look around for mortgage. So if they die, their mortgage is going to be able to get paid off. So what I'm going to do is at this point, I'm going to add a lot of value. So I'm going to take their perception of what they believe they're getting themselves into. I'm going to make it 3-4 times that. So I'm going to say, hey, write down a 1, a 2, a 3, and a 4. If they're really healthy, I have them write down the 4. If they're not that healthy or they're older, like above 50, I won't have them write down the 4 yet. I'll say, hey, write down a 1, 2, and a 3. Number 1, I want you to write down mortgage and your mortgage amount. So mortgage and then 200,000. Number 2, I want you to write down income, and then I want you to write down your household monthly income. $10,000, make an example. Number 3, we're gonna write down equity, and then I want you to write down the amount of equity that you've built up in this house, $150,000, giving you an example. Most people want mortgage protection because it's gonna pay off their mortgage amount. Now, the difference between life insurance and mortgage protection, and I'll actually do this in a question. Do you know the difference between life insurance and mortgage protection? No, the difference between life insurance and mortgage protection is with life insurance, you get number 1. It has the opportunity to pay off your full amount in a death. With mortgage protection, we're gonna look to protect these 3 main areas: your mortgage, your income, and the equity that you have in the home, okay? Number 1, your mortgage. If you pass away, there'll be a death benefit for your family that'll give them the ability to pay off the mortgage to stay inside the home. Number 2, your income. We don't want to put your family in a situation where if your income disappears, your family's left to figure out how to have to make mortgage protection payment or make mortgage payments. And then I ask people this question: what's your biggest asset? And 9 times out of 10, they say the house. And I say, I would agree with you, but most people without their income, they wouldn't be able to keep their home. So I think that we can both agree the biggest asset is going to be your income. Is that right? Yes, that's correct. Okay, great. Now that we're on the same page, we're gonna make sure that we can protect your income. With any kind of critical, chronic, or terminal illnesses, you're gonna get access to a large portion of that death benefit that's gonna give your family the ability to stay inside the home while you're either in the hospital, sick, not able to earn active income, or if you pass. So now we have added value, benefits, right? Or if there's a disability rider on the policy, if you go into disability, you're gonna get this much a month. Okay, you're gonna be able to keep that mortgage, right? Added value. Number 3, your equity. Most families that don't have something in place have equity built up in their home. And what ends up happening is they're not able to make mortgage payments if something happens to their income or they pass. So what the family ends up doing is having to figure out either scrambling at a funeral, going through the services, having to come out of pocket for all that money, and they have to figure out how they're gonna start making mortgage payments. And if they're not able to in time in the first couple of months, then they actually have to give the home back to the bank and they lose all of the equity. The last thing you wanna do is put your family in a position where there's no equity for them and they're not able to keep the home, okay? So we wanna make sure that all the equity you guys have built up inside your home stays in the family. So all of this makes sense. Yes. Okay, so the 3 things are mortgage, your mortgage amount. The second thing is going to be your income. The third thing is going to be the amount of equity that you have in your home. I'm gonna tell a story for each of these about a previous client or someone else that I had. Hey, Joe was, going out for a late night snack and Joe got in a car accident and it wasn't his fault. He got hit by a teenager who was texting and driving and he's in critical condition, not able to earn active income anymore. And now he's in a position where he isn't earning income for his family, but they're using the death benefit from the policy to now be able to make mortgage payments so they can stay in the home. I'm painting that picture, okay? Equity, right? I'm gonna paint that picture. Hey, we wanna make sure your family can stay in the home. I just had a client 4 years ago, or whatever the case. I'm gonna tell a story about a client that that was able to save the equity inside the home because of the policy. I want them to visualize it. If they're really healthy and they're able to, and they're not that old, I'm gonna give them the CBO. I'm gonna give them the return premium. Number 4, we're gonna write down cash back, okay? You're gonna get a full refund on all the money that you put into the policy when you outlive it, because that's the goal, right? You don't wanna pass away. So to be able to get a full refund, you're gonna make out like a bandit and you're gonna outlive the policy and you're gonna still be alive, which is amazing. And we're gonna have the opportunity to get that money refunded back to us. Okay, it's like a glorified savings account. So with those benefits added on, their now perception of what they're gonna be getting is so much bigger than what they already thought they were getting themselves into. So I'm just blowing their mind at the beginning of the appointment call to understand they're gonna get way more value than they thought. That's my goal at this point. And maybe they already knew about it. Maybe they already had an idea about it, but my goal is to solidify that on the beginning part of that call, right? Next section, guys, I'm gonna dive in to credibility, right? If we already did that, they took down some of our info. If we haven't done that, I'm gonna have them take down some of our info, make sure they know who they're talking to. I'm gonna overview again their situation. So, hey, I just wanna make sure I have this right. This is the amount of equity, this is the amount of mortgage payments, monthly mortgage payments you're paying in total. This is the amount of years left on the loan. This is, the lender, all of that. And then I'm gonna ask some questions. Who's the beneficiary? Who are the people in the home? What's the situation like right now? Do you have any current life insurance policies? Do you have any work policies? And I'm gonna try to expose holes in those policies if they do, right? Hey, most people have a life insurance policy through work. It's not something that's gonna stick with you long-term, and it's something that's not private. So if you lose your job or you end up leaving your job, it's like kind of like a company car, you gotta give it back to them. You don't get to keep it. So it's important to have a private insurance policy rather than just a work policy. Does that make sense? Okay, great. If they have a life insurance policy, I'm gonna say, hey, some of my clients do, and they actually don't need mortgage protection. Why don't we take a look at that to make sure that you're in a good spot? And if you don't need this, then we won't, we don't have to keep doing this, but we wanna make sure we take a look at that just so we don't get something that you don't need, right? All I'm trying to do is expose any holes to see if there's any added things that I can help them with. I'm not gonna go down the rabbit hole on that. If they're like, I don't have my policy, I'm like, okay, no worries. We're gonna keep on moving on. And I'm just gonna continue down the conversation. Okay, so once they're explaining to me their situation, currently I'm gonna ask, hey, if something did happen to your income, you did get sick, you did get diagnosed with cancer, you couldn't work, you got critically hurt, you got in a chronic situation. If you did pass right now and your family had to come out of pocket, what would that look like for them to be able to come up with the money to make mortgage payments? Would they be able to do that? Is that a position that you want to leave them in? Is that comfortable? If they're on Social Security, if they're on disability, I'm going to explain Social Security survivorship, tell them what that looks like. Hey, did you guys know, are you aware that if one of you guys passes, you end up with one of the incomes of the higher amount of the spouse and you lose the other amount? If you guys were to lose half of your income, do you think it would put your partner in a worse position as time goes on? Would it be harder for them to make mortgage payments? Yes, I need them to say that to me. It would be harder, right? Okay, now that I need them to talk to me about it. I can't just explain it all. I gotta ask questions. I gotta do this in question form, okay? So once they tell me these things, then I know that this is a solution that makes sense for them. They know it too, okay? And I'm gonna ask them straight up, what are you gonna do in this situation? And I'm gonna wait. And they're gonna tell me something. I'm gonna say, it seems like this isn't a situation you guys wanna leave each other in. This isn't a situation that you wanna leave your family in. It's probably not a matter of whether or not we're gonna get the coverage. We'll make sure we look at a couple different options for you. Is that fair? And within all of there, I'm gonna ask some more questions about their why. I'm gonna ask maybe some income questions just to make sure I don't present anything that's way over their head or way, I'm not helping them get the right policy for them and they could have afforded something more. So I'm gonna ask how much money do you make, that, and what kind of jobs they have, and get to know them a little bit more, right? Get to know their situation a little bit more. And then I'm back into education mode, right? I'm gonna do my trial close. It seems like it's not a matter of whether or not you're going to get this, so we'll look at 2 to 3 different options just to make sure that you can get something that's put in place to protect your family, your mortgage, your income, and your equity. Is that correct? Cool. Okay, is that fair? Right? Awesome. After that, I'm going to education mode. I'm going to talk about the company, the product, right? So I'm going to say, hey, this is the company. They've been around for over 100 years. They're A-rated. They've never missed a payout claim. All that good stuff, all that jazz. Make sure they know they're getting themselves into a plan with a good company. I'm going to say, never call them. You can always call me. You're going to have to wait on hold with them. You're going to be able to contact me directly. We don't want to have to put you guys in a situation where you're not getting back to in a week. I'll get back to you the same day every single time, right? Next 24 hours, I'll make sure that I always get back with you. After that, I'm going to talk about the product, and I'm going to do this in options form. So I'm going to be like, hey, write down A. This is option A, where it's going to be $175,000 in coverage. It's going to have this much for critical, this much for chronic, this much for terminal illness. This is how much it's going to pay out if you go on a disability. And then we're going to go to B, and we're going to do $200,000. We're going to do $225,000, and this is going to be how much is going to be there in these 3 different options, right? So I'm totally educating them. I'm putting it into a real situation for them based off of this general stuff that we talked about in the 1, 2, 3, and 4. And then this is how much it's going to pay out at the end. So I'm going to talk about the death benefit, the living benefits, and then the return of premium if they are able to get the return of premium option. After that, I'm just giving them the numbers and I'm saying which option makes the most sense for you. And then I'm going to say, perfect, I'll pull up the request for coverage. We'll make sure that we get this taken care of. Can you verify spelling your first and last name? I forgot to mention, before all of this, I'm going to explain the process. and I'm gonna say, we're gonna look at some options. We're gonna customize and structure a plan that makes sense for you. Nobody knows your situation better than you, so you guys will decide which one that is. And then we'll go ahead and we'll submit the request for coverage to make sure we get this taken care of for you. Is that fair? And that just tees up in their head that we're submitting something. They know it's not out of the blue. Okay, so that's the process, right? That's a healthy person example. Now, if someone's not healthy, if someone is not able to afford a term policy, if they can't qualify for the return to premium option, if they can't get a term, equity protection. I'm going to tee up the whole conversation to protect their equity. And that third piece that we have, I'm gonna drive that home. I'm gonna touch on that the most. That's what all this is gonna be for. And I'm gonna talk about making extra payments to make sure that the family can stay in the home for 5 months to 2 years, whatever the amount that we get is, so they can make sure that they're in a position where they don't have to sell the house, or they get the house taken from them, they get no equity, and then they're left out on the street to figure out what to do next. So equity protection is a program, it's a concept, right? These are all concepts: mortgage protection, final expense, equity protection, it's all a concept. And the goal is we're going to talk to them about protecting that $150,000. We want your family to keep that in the family rather than giving that back to the bank. That's important, that's a lot of money. We want to make sure that the equity that you guys have built up stays with your family rather than go back to the bank. Now we want to make sure that we have at least some time to make those next mortgage payments, so you guys aren't out on the street the next month because you couldn't make a payment. And so we'll make sure that we protect you guys with either a year, 2 years, 3 years, 5 years of mortgage payments to make sure that you guys are going to be able to stay in the home. That's the concept of equity protection, and it's a whole life Simplify issue life insurance program that they're going to get, and we're going to tell them, hey, it's in place the rest of your life, so it's not a matter of whether it's going to pay out, it's a matter of when. And that when is when that day comes. So it could be tomorrow, it could be in 5 years, it doesn't really matter, but it's going to pay out no matter what. Okay, so that's equity protection overview. That's how I handle the conversation if they're not as healthy or they can't afford that term policy. Like I said earlier, guys, I have a lot of success. This is the second tip that I'm gonna give you guys. I have a lot of success with follow-up sales on the third phone call because it's like a lot of new information to them. They wanna talk about it, and on the third call, so at the end of that second call, if I can't get them to commit, I'll say, hey, no worries. Third call, we'll either just decline the coverage or apply for it. And then I'll set that time in the next 48 hours. My appointments are always set in the next 48 hours, okay? I'm not trying to have appointments set out for a week because most people aren't gonna be there. Number 3, guys. So we want to create a solution with the resources that we have, right? Mortgage protection is a concept, okay? Equity protection is a concept. We're gonna have to get a little bit creative from time to time to make sure that it's affordable for them, it's gonna accomplish all the things that we want it to them. We're gonna have to present it in a way that makes sense to them, and we're gonna have to use our resources with term, the cash back policies, the disability riders, the living benefits, whatever they see value in, the whole life policies, right? Whatever they see value in and whatever they're able to get to be able to produce that solution for them. It's a little bit more advanced. It's not just in the box. It's called final expense in the box sale because it's like everyone gets the same thing. It's like you have the same conversation. Mortgage protection, you gotta be a little bit more creative. You gotta be able to come up with a solution that makes sense for them, right? You gotta be able to use your resources to make something. So guys, this is the whole breakdown of what I do for my mortgage protection sales process. The 3 biggest tips again is going to be to use equity protection when you need it. You make a ton of sales with it. There's a lot of people you're going to come across that have to go that route. The second thing is going to be follow-up sales, third call sales. Don't give up on these people. Drip text campaigns, keep following up with people. And then that final thing, guys, is going to be the final tip is going to be to use your resources. Get creative. Use something to create a solution for them to solve their problem. Equity protection, mortgage protection, final expense, it's all a concept. Use your resources to help put a solution together for them. It makes sense for them to put them in a better spot, man. Guys, if this video helped you out, share it with a friend in the industry. This is stuff that I've been able to learn that's helped me generate a lot of income in my life and in my business. And I hope that it helps you guys as well. So I'll see you guys in the next video. Man, if this is the video that helped you out today, I'm gonna place a couple other of my videos right here for you guys to watch. It's exactly what you're gonna need to see following today's video, guys. See you in the next one.